Thanks for clicking. China's property crisis heated back up this week as another real estate developer that was once considered safe had its stock plunge.
Just when I thought I was out, they pulled me back in.
The stock's 81% collapse renewed concerns about China's ability to effectively manage the property crisis. With the Olympics over and more bonds coming due, we're likely to hear more and more about China's real estate crisis and the steps being taken by Beijing to try to prop up the real estate market. So today what we're going to do is skip Evergrande.
I finally get some luck.
And move on to Genro, the real estate developer that had its stock price plunge. Then we're going to move on and take a look at some of the steps being taken by China as it moves more and more towards a loose monetary policy and attempts to change the perception that China's real estate market is failing. More and more bonds are coming due in March, and as we'll see in a few minutes, in China, where there's smoke, there is fire. So we're definitely going to be having an eventful next couple months with the real estate crisis in China, and we'll obviously have updates out on those every Friday. If you want to get those updates, make sure you click like and subscribe. But for right now, let's get into Genro. A few months ago, we talked about Shimao, another real estate developer that was considered ultra safe by investors, falling prey to the Evergrande contagion. This week we found out that Genro, another real estate developer in China, which was once considered ultra-safe by investors, had also fallen prey to the Evergrande contagion, as it warned that it might not be able to make its $200 million bond payment coming due on March 5th.
I have no money and no promise of any coming my way anytime soon.
And the problem is that this came after a January 4th statement by the company that it would have no problem making its bond obligations in March. As a result, Genro's shares dropped 81%, as investors, having seen this before with Shimao, were growing more and more concerned about the company's ability to make good on its debt coming March. One of the biggest issues with these real estate crises is not only that it makes real estate investors take a closer look at the rest of the developers, as we saw with Shimao, but it also lowers the confidence on every single real estate developer throughout China. As if you take an example such as Shimao, which was considered safe and then not, and then you look at Genro, which was considered safe and then not, you're not going to have confidence level in any of the other real estate developers.
It fooled me. We can't get fooled again.
Understanding that the continual downfall of these real estate developers is creating a perception problem in China, Beijing and the People's Bank of China have instructed the big banks to start lending in some of the big cities throughout China.
You want money?
Which the PBOC and Beijing are hoping will help to lure buyers back into the market and help prop that market back up again. So in some of the larger cities, such as Guangzhou, lenders have lowered their basis points, their cost of borrowing, by about 20 basis points. So that's a lowering of about 0.2%. Chinese Finance Minister Louis Kun also announced that they would be lowering the down payment requirements for first-time home buyers in some of these larger cities. Previously, it was 30% down. Now they're only requiring 20% down. And as everyone in the West knows, when governments decide that you need to put less down on a house, that's not a great sign for the housing market, and it's definitely not a great sign for the economy.
Very bad.
Governments only loosen restrictions when things are going badly. They never make things easier when things are going well. This is even more the case when we look at the fact that small cities are usually where the majority of real estate sales happen, but Beijing and the PBOC are targeting the larger cities. They're doing this because the larger cities, if they can get real estate sales up in those cities, it's likely to act as a demonstration to the rest of the world that real estate is back.
I'm back, baby!
So Beijing, while targeting the bigger cities, are actually targeting the international investors that really, thus far, haven't wanted to invest in China for obvious reasons.
Although most sales come from smaller cities, third and fourth tier cities, these large urban centres are sort of considered a bellwether for buyer confidence. And really will be the sort of first and prime movers that people will be looking for to see any sort of fundamental improvement in sales.
With sales of Chinese real estate down 41% since January of 2021, which is a massive drop, with Chinese developers being unable to access international financing, international funds, like we said, for obvious reasons, and with President Xi hoping to be elected or appointed to a third term in the coming Communist Party conference this fall, China clearly has a perception problem. From the looks of it, they also have a real problem. The continued downfall of these real estate developers bears that out. But they also have a perception problem, and they are targeting these international investors to get them back in the game. So they are focusing on the big cities, they are lowering down payment requirements, and they are pushing the banks to lend as much as they can as a means of making real estate look better in China.
Looks good.
With so many dollar bonds due, it's not clear whether or not these are going to have the desired effects, and judging by looking at the cost of borrowing for international financing, it doesn't look like they have had those effects as of yet. Of course, this could all turn around in the next couple of months, and we will continue to keep our eye on this, as well as how the Chinese crisis relates to that in Russia and Ukraine, which we talked about yesterday. We will continue to have updates on the Chinese real estate crisis and how these new measures, how these new pushes on the banks, how these new down payment rules, and how this push to create a better perception to international investors will affect the Chinese real estate market going forward. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.